All of these international people, when they buy USDC or USDT, they are funding US debt.
How long will the trust of the dollar last?
What place could actually issue as much assets as the US can as quickly to provide that? And that I think is a bit of a challenge. Basically, there are certain explicit pronouncements from the Trump administration that they see the Genius Act as a way of controlling the stablecoin market and, as a result, boosting the continued relevance of the dollar for the global economy. They also see that these are, for the time being at any rate, overwhelmingly based upon the dollar. So what they're quite keen to do is to make sure that that new dollar reality doesn't sort of completely swamp the Eurozone.
It's really a choice by the people.
What is it you want to build? Why do you want to build it? And who are you trying to sell it to?
The way they consider to adopt crypto is to use it as shadow banking balance sheet.
There are a lot of people who see stablecoins as the enabling mechanism for the AI agentic economy.
Welcome to Block Central, a bilingual content platform focused on frontier finance and global business. Here, we engage in conversations with founders, investors, corporate leaders, and policymakers around the world, jointly decoding the underlying logic behind shifts in capital, technology, and institutional change.
Hi everyone, welcome to Block Central. I'm your host Serena, and today we're going to discuss something crypto, but I think it's far beyond crypto. And from my point of view, I think it is the most real and scalable real use case in crypto. That's stablecoins. And joining me today is James Kingston. Hi James, how are you?
Good morning, good morning. I'm very well, thank you. It's a pleasure to join.
We're so happy to have you here. So can you give a brief introduction of yourself to our audience?
I certainly can. So I run DAO SPV. What we do is provide offshore entity formation services to the crypto industry. So we set up token issuance vehicles, holding companies, operating companies, wrappers for DAOs and protocols, and indeed, services for stablecoins, helping them set up international entities and then facilitating them getting the licenses that they need and the places that they need them.
And also, James himself did quite a few deep analysis on the stablecoin relevant regulations in different jurisdictions. So I'm very looking forward to our discussion today, because we're gonna have like a scaling among different continents. Maybe we'll compare the stablecoin regulations in the US, here in Europe, and also how it goes in Asia. And I think last year would be quite a historical year for the development of stablecoins. And in every major jurisdictions, they launched the regulations and cleared the way how stablecoin be used or issued. So starting from the US, the Genius Act, and later in Hong Kong, I think it was last summer, and also MiCA as well. So how do you think those governments and what are their initiatives? Are they protecting the consumers? Are they protecting the banks, or they're protecting the money sovereignty? What do you think?
Yes, it's a fascinating question. In stablecoins, we see something that might previously look like quite a dry or a niche topic to some people, actually calling forth among the most fundamental questions of sovereignty, how the economy works, who it works for, and how money circulates through the system. I think all these different states throughout the world, they've seen the rise of crypto and blockchain, and they've been wondering what to do about it, how to react to it, how to profit from it, but also trying to mitigate some of the threats that they can see. And we can see all of this coalescing in the stablecoin conversation. So I imagine, people listening to this podcast, they probably have a fairly good grasp of what a stablecoin is, but, we'll just fling out a working definition, because why not? It's always good to define terms. I did a history degree. We were always told, define your essay at the beginning, define the question you want to answer. So here we are. So what is a stablecoin? A stablecoin, broadly speaking, is a coin that is pegged to another set of assets in order to try and make it more stable. Now, this could be a range of different assets. Indeed, it has often been a range of different assets. And it's important to distinguish between these before we dive into the different parts of the conversation that we're going to have later today. So you have assets that are pegged to national currencies, often referred to as, e-money coins, perhaps. These are assets that are pegged 1-1 to something else. You then have what in the EU you'd refer to as asset reference coins. So these are where a stablecoin is pegged to maybe a basket of different other assets. Now, that could be a variety of different actual underlying fiat currencies. It could be a load of different RWA tokens. It's a mix. And then you have algorithmic stablecoins, which these days are not very popular after some famous crashes in the last just before the last crypto winter. Now, the states all throughout the world, they've been trying to work out, they see the value in stablecoins, the rapid settlement, the cross-border payment, the flexibility, the programmability, but they also see a threat to their own economic system. And the ability of their own banks and monetary authorities to exert control. So the range of regulations, the wave of regulations that we've been seeing last year and going forward into this year and coming years is really all about grappling with that.
I really like how you give a general review of the history of stablecoin. So the stablecoin thing goes back like a very, very early years, maybe I guess like 2017, if I remember it right, back then, because there is no stable thing in the crypto trading, like the pairs, like Ethereum pegged to Bitcoin, but both coins, they are so volatile. So then people, they want to have something that is stable. And it's also because like US dollar is the most recognized currency, has the most consensus. If we see consensus, we use consensus a lot in the crypto world. So back then they used the US dollar pegged stable coin to pair with the other cryptos as a trading pair. Later on, I feel that it's really a choice by the people because they find this stablecoin thing is so convenient. It is widely used in trading, like trading counterparties. They use this for settlement. Or we know in the traditional banking system, it takes a few days for settlement. So people realize the conveniency, and also in some countries that their own currency is not stable. Sorry to say so. I mean, some like countries in Africa, in the South America, the local currencies can depreciate so fast. So people there, they use this as a store of value event. Also, I think the stablecoin improves the global like collaboration, like especially when we're in the crypto industry, they can feel that you can work with anyone in the world and your transaction just based on stablecoins. There's no cross-border restrictions. It gives a lot of convenience. So I would say I see this like a revolution. It's from the bottom up, and now it's growing. The momentum is so strong, and the market grows so big, and then the governments and see it's unstoppable development of the history, and then they start to get into it to regulate it. But actually, it's very interesting. Maybe we discuss a bit more about this, the US dollar stablecoin. Maybe we can discuss a bit about its basic like structure of it, and also something happened last year or the year before that Europe banned the US dollar stablecoin. They think this is kind of like a threat. Now the most popular two kinds is USDT, USDC. Can you give a bit explanation on how they are structured, what are the backup assets, and why the Europeans think it's a threat?
Exactly. So USDC and USDT, these fall foursquare into the first category of stablecoins that I mentioned earlier, which are the fiat-backed stablecoins. They are immensely popular. They make up the vast majority of the overall stablecoin supply, and of stablecoins in general, these directly fiat-pegged stablecoins make up about 87% of the circulating supply. Another key thing to note is that this always varies slightly depending upon the month you look at it, but when I last looked, US dollar pegged stablecoins made up about 99% overall stablecoin supply. So what we're talking about is a very dollar focused thing. And that has some quite important ramifications, both for the US economy potentially as time goes on, but also for everyone else. So USDC and USDT, they're pegged to the dollar. The question is, well, how are they pegged? What is it that they're buying to have that? The largest dollop of assets that they use is US Treasuries, which in effect means that they are buying US government debt. So what we're seeing, it's quite interesting. It has ramifications when you think about it. All of these international people, when they buy USDC or USDT, they are, because that's drawing upon US debt in the treasuries, they are buying US debt. So what they're doing is funding US debt. So there's a particular angle that some analysts would see here, which is that if the trajectory of the stablecoin world continues as it is, of being very heavily dollar reliant, then what we basically, let me rephrase that. If we see everyone using the currently dominant models, which are most easy and seen as most stable, then it actually boosts the continued dominance of the dollar. And this in turn helps the US economy and potentially challenges others in ways to do with monetary sovereignty. So it's an interesting question. On the flip side, of course, it's all based on confidence. The US dollar is stable.
You mean the confidence from the people, like which they trust? Or
Exactly. It's a fundamental trust thing. All these people putting their money where they think it'll be stable. So I do find myself wondering if somehow there wasn't that stability, what would happen to the stablecoin market in turn. But for the time being, it definitely buttresses the importance of the dollar, the role of the dollar, and the power of US monetary authorities.
You brought up a deep, profound question is about how long will the trust of the dollar last?
It's an interesting one because, I've previously, as you know, Serena, I've done some writing on stablecoins, comparative jurisdictions, stablecoin policy and whatnot. And I find myself, with viewed with one frame, we can see stablecoins as extending the hegemony of the dollar around the world. But on the other hand, if we put everything onto blockchain rails and make it easy, I find myself thinking, well, in the long run, if that confidence was to switch, maybe all of these, the pre-existing network of blockchain institutions mean that actually could just be even quicker to switch away from the dollar. Now, I'd have to think about that a little bit more. It's just a hunch I have.
But you always need some backup assets for that thing. What
Exactly.
are the
Yeah. So
backup assets?
the key question is what place could actually issue as much assets as the US can as quickly to provide that? And that I think is a bit of a challenge. I was talking about this recently in relation to the UK because it seems to me from a British perspective that, why don't they do what the US does? The US issues treasuries, the UK should basically have, all these tokenized gilts and fund it. And various people are suggesting to me that maybe they just, for various internal reasons, you simply wouldn't be able to issue the raw amount needed. But yeah, I don't know. I need to look into that a little bit more. But to go back to something you said earlier, so the thing that changed last year, of course, was the Genius Act coming in. And, there are certain explicit pronouncements from the Trump administration that they see the Genius Act as a way of controlling the stablecoin market and as a result boosting the continued relevance of the dollar for the global economy. What we have to do is, with our crypto hats on, we can be very interested in blockchain, stablecoins, how that makes everything less volatile, smoother, all of the use cases that you outlined when you were speaking a few minutes ago. But there's also a global geopolitical thing going on at the same time. And it very much blends together when it comes to stablecoins.
And there is a very interesting point in the Genius Act. I think first is that they ban, I don't know if this is the right word, they banned the CBDC. They didn't support CBDC. And I think there's also one clause in that is the big tech company cannot get into this business.
It's
relevant to the Libra coin that it was supposed to be issued by Meta. How do you think of this CBDC versus a stablecoin thing?
I think it's fascinating. I wrote about this a while ago. Money is completely fundamental to the economy, right? And it's completely fundamental, not just the economy, but also our lives. It structures everything that we are, everything that we do. It ties almost everyone in the world, barring perhaps a few uncontacted tribes, into this web of global obligation, whether they realize it or not. And that invisible thing connecting us all together is money, ultimately. CBDCs speak to the very heart of it because, what you're doing is saying, not just that the government issues money, that it has some overall assumption of that, but actually that it can fully control the money at all times, potentially. Now, a lot of it really comes down into the architecture of the CBDC system, of course. There are multiple different ways of having the CBDCs be elaborated. But what there is a very strong potential for, firstly, the entire money supply, where it goes, how it's being transacted, to be visible to the government, which, if you believe particular conceptions of freedom that are particularly strong in the US, that's a threat in and of itself. There's also programmability. So let's say, for instance, welfare payments. So every month you get, distributed into your state digital wallet. Let's call it, I don't know, for the sake of argument, $2,000, $3,000. whatever. You get that into your wallet. Now, let's say that those had come in the government CBDC, and because you were tagged as someone who is receiving welfare, the government wants to make sure that you're spending it on the things the government approves of. So maybe you can't spend it in a bar. You can't spend it, I don't know, on fast food because that's unhealthy. You can't spend it on, well, gambling's an obvious one. They'd probably hit that. You know what I mean? So actually, you could really start structuring in very important ways people's freedom. And people are, they're very worried about that. And I think they're right to be concerned. You can see how it could be misused.
In Europe, my observation is they discuss more about this CBDC thing. Yeah, what's your view on this? I feel less freedom on this monetary policy.
Well, yes, I think freedom is an endlessly flexible word. Of course, freedom to do something versus freedom from something, etc. I think, how to put it, CBDCs, as I said earlier, they depend very, very heavily on implementation, how the actual underlying architecture of the system works, and the controls they have. In Europe, there's been some discussions on them, but Europe also cares a great deal about privacy and freedom as well. I think really what we've been seeing so far is an emphasis just more on stablecoins and on wider crypto regulation than on CBDCs so far. But yeah, there have been conversations off and on for a while.
Since we're here on the stablecoins, my next question is that who are the issuers? What are the criteria for the issuers under MiCA? Can private companies be the issuers, or they have to be licensed financial institutions?
Yes, you have to fulfill a range of requirements in Europe. Circle back to those points we're making on monetary sovereignty, ultimately. So what does Europe see happening? They see that there's this whole new world of blockchain-based coins, exploding into being. They also see that these are, for the time being at any rate, overwhelmingly based upon the dollar. So what they're quite keen to do is to make sure that that new dollar reality doesn't sort of completely swamp the Eurozone that Europe has spent so long, previous decades, building, because that would basically corrode European monetary sovereignty. So one of the purposes of MiCA is to make sure that stablecoin issuance is regulated, that it's brought within the European regulatory umbrella, and they can see what's going on and have some amount of control over it. So yes, if you're going to issue a token in the EU, you're going to have to go through a licensing regime, issue a white paper. You'll also need to have, there are various different hoops you have to go through to get it recognized, a relevant authority within the European Union. And you're also importantly going to have to incorporate a European entity. So you mentioned at the beginning of this call that there had been almost like a banning of US stablecoins in the EU, which isn't quite the case. They're there, right? You can get.
Maybe US... I add a little bit. I think this banning happens on the crypto exchanges that they delist the US dollar stablecoin pairs. But exactly. and I think they cannot ban transaction between wallets. So it's on the centralized parties.
That's a very good point. And I think, we could come back to that because there's some, African countries in particular have been struggling with this. What does it mean to ban? You can't, it's actually very difficult to stop two wallets trading directly with each other. What the EU would be doing is putting pressure on centralized institutions like the exchanges to delist certain tokens. But they're not, importantly, they haven't been saying, you can't have USDC and USDT and all of these big stable coins, you just can't have them. That's not what they're saying. They're saying, you can have them, they can exist here, but they're going to have to create a separate EU arm, set up, get registered, get licensed, and then you can do it. They're not just saying that you can have them freely floating.
Under control. They know what is happening.
Well, I wouldn't say control, again, like control and freedom, these are always very flexible words, but certainly under the supervision of.
When you talk about this, EU thing, actually, there is a question came up to my mind because UK, from the monetary level, it's always independent, like Switzerland, away from this EU system.
Yes.
And the MiCA applies to UK as well, right?
No, and I actually think this is both one of the most exciting and frankly frustrating things presently. As you can no doubt surmise by my accent and my name, I'm British, calling here from London. This might even be a British plane, I'm not entirely sure. I might be making that up, but anyway, it looks quite traditional. Britain left the EU. You can say whatever you like about that decision, but it's happened. And that offers the chance for regulatory flexibility. So Britain is not in the MiCA regime. It's very close to Europe, lots of ties to it, but it's actually not in it. And I think that offers the scope to do some really quite interesting things. My view so far is that we're not fully embracing that opportunity. There's currently various consultations and ways of considerations undergoing about what the UK's stablecoin regime should be going forward. It's still a sort of watch this space. There are some people within the British crypto community who are a little bit worried by some of the noises they've heard from the government about stablecoins.
Worried about what?
The government might be taking too much of a conservative approach. So, for instance, there was something about, for instance, limiting the amount of stablecoins that people could hold, including businesses, to like, say, 10,000 equivalent, which for an individual human being might be quite a lot, but for a business, it could just be a complete small change. So there's been some warnings there. Yeah. One thing that's interesting, and again, this kind of strikes to the core of some of the regulatory questions, is I read that the Bank of England had been proposing that for strategic stablecoins, as they're calling them,
strategic stablecoin,
pound-pegged stablecoins that might be open to everyone, that they were saying that they had some quite strong views about what it should be backed by. So saying that rather than being backed by treasuries or other asset types, that what they want is for 40%. So let's say you had a new sterling stablecoin, that 40% of it would have to be backed by deposits held in banks, held in private banks. Okay. So a lot of it comes down to, so we have the monetary sovereignty point, but we also have maintaining the current banking sector. What does it do to the current banking sector and the entire infrastructure of it if you just totally circumvent that? So this is where, again, it's like with the CBDC question earlier, the architecture of where things are deposited and how the money flows, it's very material to regulators.
Basically, the way they consider to adopt crypto is to use it as like a shadow banking balance sheet.
Yeah, it's interesting. And of course, as a side note, I should say, so actually the British Isles have seen a stablecoin for decades. I don't know if you know this.
Okay.
There is a decades old stablecoin in the British Isles. So I'm from the Isle of Man originally, and the Isle of Man has its own pound. So if you ever go to the Isle of Man, you'll see it's printed notes. The Isle of Man pound is actually a stablecoin.
I get your point. Like Hong Kong dollar actually is also a stablecoin. It's packed with the US dollar.
Yes, interesting. Well, you see, yes, it's pegged. Yeah, the Isle of Man is pegged 1-1, and it's held in a deposit. I think somewhere in Manchester. I forget precisely, but yeah. So just a little aside, it amused me quite a lot when I first realized that.
If you're talking about issue a stablecoin, which currency stablecoin to issue, you start to think about the market of the currency, how many people will use it. For example, in Hong Kong, this has been discussed a lot as well. For example, if you issue a Hong Kong dollar stablecoin, actually the currency itself not much used internationally. It's just within the economy. One last thing, since we have a limited time today, maybe we can talk a little bit about this yield generating or yield bearing stablecoin. That was quite a hot topic recently in these 2 months, and there was a conflict between Coinbase and the traditional Wall Street banks in the US, and they had a big fight over that.
Yes. It's a really interesting question. I think with the search for yield, on one hand, you've had the imperatives and interests of the DeFi world, where you can often get some quite extraordinarily high yields, facing the concerns of regulators that having yields on these assets could have all kinds of disruptive effects that might damage their needs. What we've noticed is that quite a lot of the larger states are clamping down on yields, or they're just not allowing yield-backed stablecoins in general. For instance, in the US, they basically said that you can't have a yield-backed stablecoin, which is completely central. In Europe, yield-backed stablecoins are also not allowed. Sorry, yield-bearing. Must be some yield somewhere to back it, but that's a separate conversation. What you're then having, quite interestingly, is a wave of offshore jurisdictions that are going to allow yield-bearing stablecoins, and they see this as an element of their competitive positioning. So Bermuda, in particular, which is a British Crown dependency in the North Atlantic, not the Caribbean, as they will always tell you, and they get irritated at being lumped in. They are allowing yield-bearing stablecoins, regulated yield-bearing stablecoins through Bermuda, and they think that's going to be a really interesting part of their competitive positioning as time goes on. You can use other jurisdictions to create yield-bearing stablecoins too. Panama, for instance, is a place through which one could do it, but Bermuda's kind of making a play to be the kind of top-tier regulated version of it.
But when you're talking about those offshore jurisdictions, they allow the issuance of this yield-bearing stablecoins, but how about the users, and will this be restricted by, for example, I domicile in Switzerland. Let's say if Switzerland doesn't allow, I'm thinking they doesn't allow you to hold. I don't know, like how will they, for example, US, they don't allow this yield-bearing stablecoins, but as a US citizen, he still holds the yield-bearing stablecoin issued in Bermuda, maybe through a decentralized way. So yes. I think the regulations, they can only control the centralized entities. They can ban the exchanges to list those coins.
Exactly. So I think it all comes down to what are you trying to sell where, and who are you marketing it to, and how are you marketing it, and what's your distribution strategy. I think this is really the kind of thing that tends to come in there, because you're right. Some jurisdictions you can set up all kinds of unusual things, but actually if you're then trying to sell it in a more conservative place, you mightn't be able to distribute it as freely as you'd initially hoped. So it's always kind of a question of working out what is it you want to build, why do you want to build it, and who you're trying to sell it to. And then sometimes you have to go in increments to get there.
I understand why the banks are against this idea, because this is always the banks' most lucrative business. They lend the money out, they take the depositors' money and only give them a very low interest, and they earn from this spread.
So the heart of the banking system, basically, or the banking system as it's been elaborated so far. And there's a lot riding on the traditional banking system. So
I would love to see the evolution of this, because, like I mentioned at the beginning of our conversation, this is kind of like bottom up, right? It's
yes.
a people's choice, and of course, for customers, they would love to receive more interest on their deposits.
Yes.
And it will be interesting to see how this develops. And we will keep an eye on that.
Yeah, and it's absolutely fascinating. I think you're right to call upon its bottom-up nature. The risk for states is that what this means is a process of continued dollarization, particularly in some of the kind of smaller markets and economies. Smaller user advisory, often large countries, but smaller economies. So you can see this in particular in some of the African jurisdictions and also Latin America. If people are retreating to the dollar for its comparative lack of volatility, and more transactions are being then conducted in these dollar-backed stablecoins, what happens to the local economy? Because suddenly the local monetary authorities, they lose all of their levers. It just doesn't matter what they do to their local currency. So they can't, one of their ways of helping the economy and their people is just slowly vanishes. And I think there's a lot of concerns about that. You're seeing throughout Africa in particular various initiatives to start creating African stablecoins. There's been attempts, Nigeria has been particularly prominent on this, to ban crypto and try and clamp down on it. But it's a problem because, they're just so useful. But then at the same time, it starts hitting certain long-term things. So it's a knotty and quite interesting
it's a complicated, sophisticated issue,
yes.
Not a problem, but I say sophisticated issue. It's like an ecosystem. That's two sides. Like you have the government and you have normal people, yes. And they have their own interest to defend, their own agenda to defend. So
yes.
That's very interesting. We are in a rapidly shaping world right now, not only just the crypto blockchain technology, but also AI. I think many things will happen. And also, according to Chinese zodiac sign, and now we're entering the fire house year. And actually, the fire represents destructive creation. It destructs things and also creates new things. Yeah, we are living in a really very interesting cycle, I would say. So thank you, James, for your time today. This is such an interesting topic. There is lots of angles, and it's still developing. And so we will have a series around these topics. Just stay tuned. We will have a more topics content around this.
Yes. And you mentioned AI there. Maybe this could be a whole nother session, but there are a lot of people who see stablecoins as the enabling mechanism for the AI agentic economy. because it enables these incredibly rapid settlement between, automated agents. So that's a whole other kettle of fish, as we say in Britain. So I'm very happy to talk about that sometime.
Definitely. Okay, that's it for today, but stay tuned on Block Central. And also, James himself has a personal blog, and he constantly writing around these topics, and I will put his link in the description box. So if you like the content, and just subscribe, and so you won't miss the future content. We will see you in the next one. Thank you, James.
Thank you. Bye-bye.